Alright, so this is our first video on our first video on specific balance day adjustments. This time we're looking at prepaid expenses. And in the last two videos I've been talking about this particular prepaid expense. We paid insurance of $1,200 on the 1st of the 5th, 2016, and it covers us for 12 months. And you'll remember that I've said that if it covers us for 12 months, then we expend 2 months of this expense in 2015-2016, that financial year, and we expend 10 months of that insurance from the 1st of the 7th up till whatever that is, so for the next 10 months. So we have 2 months in that financial year where it's an expense, and then on that particular date, on the 30th of the 6th, it's what we call a prepaid expense, which is an asset. It's some insurance that we have in our pocket that we'll expend over the next 10 months. So we do a balance day adjustment to turn 10 months of this expense into an asset on that date. Sounds complicated, but it's really quite simple. So what I'm going to do is pause the video. I'm going to create this journal entry, and then I'm going to do my balance day adjustment journal entry. Okay, so here's our journal entry. On the 1st of the 5th, we had an insurance expense of $1,200. Remember, expenses are debits. I haven't put the headings up the top, but you guys have seen journal entries. Cash at bank, we paid cash for this insurance. Not that it really matters. It could have been in accounts payable. Cash at bank, $1,200, and there's a credit because our cash at bank went down. Now, journalize that. We bought insurance for 12 months, and it was on the 1st of the 5th. Now, obviously, hundreds of journal entries are going to happen, but then eventually we're going to get to balance day, the 30th of the 6th, and we're going to have to do our balance day adjustment. Now, what's going to happen? Well, we have to decrease our insurance expense, because this insurance expense is telling us that we had a insurance expense of $1,200 in this period, the period 2015 all the way up to the 30th, 2016. But that's not true. We had an insurance expense of 2 months here, right there. So we have to bring that insurance expense down. Now, the other thing we need to do is create an asset called a prepaid insurance expense. Okay, so an asset, create an asset. So if we're creating an asset, that must be on the debit side. So prepaid insurance expense. Okay, and that prepaid insurance expense is 10 months of prepaid insurance. So $1,200, that's $100 a month. So that's $1,000. So don't get fooled. Prepaid insurance expense is an asset. Now, the other thing that's happened is our actual expense, our insurance expense, was $1,200, but it's gone down by $1,000. Now, the net effect of this in our ledger is that insurance expense for that year was $200, or at least for that small part there. And we have this new asset. It'll appear in our balance sheet as an asset called prepaid insurance expense. Or actually, we'll put them all together in the balance sheet. We'll call them prepaid expenses. Same way that we put our accounts receivables all together. Okay, last thing I really need to do is journalize this. Now, we don't need to be too descriptive here. Just going to call it a balance day adjustment. Now, you're going to get really angry at me because I think you already know what's going to happen on the 1st of the 7th. We're going to undo all of this. Prepaid insurance expenses, accrued revenues, all of that garbage only lasts for one day, only lasts for a moment when we balance our books. But it is an important part of this because of the matching principle and accrual accounting. We've got to match our expenses to where we see the benefit of those expenses, which is why we're creating this asset here, because we need to match that to that. Okay, that's one of our balance day adjustments. There are 3 more to go.